Welcome to Pressure Points. I'm Gene Munster. Our topic is Meta earnings. We'll recap the quarter and talk about the impact on the longer term. So as far as the quarter and the guidance, they reported revenue that was about 2.5% higher than the street. That was all good. And it got even better when you quickly got to the guidance. They guided revenue for the March quarter to be up at the midpoint. At the midpoint, it was 5% higher than street expectations. At the high end of their guidance, which they usually exceed the high end of their guidance, it was 9% higher. So rough numbers is stocks up 15%. They guided 9% higher on revenue, which we'll talk more about in the longer term impact because investors are leaving more optimistic that this momentum can continue. Another important metric was the daily active user. I'm sad that this is the last time they're going to be reporting that. I've gotten to know that metric pretty well over the last decade. It was up 6% year over year. That compares to 5% growth in the September 23 quarter, 5% in the June 23 quarter. And before the pandemic, that number was kind of up 2-3% a year. And so we've seen an acceleration on the daily active users. That number is about a quarter of the world's population. There's about 8 billion people in the world. Just over 2 billion use the Facebook property daily. And so I think that to grow that number off of a big base is testimony to how they are making their products more sticky. Some could say more addictive, but what they're doing is working. And the part that is most surprising is that what is working now, there's very little impact from AI today, and that impact will increase going forward. So as far as a little bit more on the quarter, if you take the high end of their guidance range for the March quarter and you assume that they hit that, they will grow revenue at about 30% in the March quarter. That compares to analysts were at 25% before. There is a little bit of a benefit, about 1/90th of a benefit because there's an extra day this year because of leap year. But overall, that guidance was impressive. And we're going to pause there on kind of the near term and then shift now and talk about the longer term. Is that big picture here is Meta is all in on AI. And they're being aggressive and revving their models quickly. They're open source models, but revving them quickly and being aggressive at releasing products. They've got 3 new products that have been released at the end of 2023 that are slowly starting helping engagement with like a text chat. They also have an image generator that's going to go in Emu into Instagram, and then they have these celebrity personalities. That's kind of on the engagement side, but they also have better AI tools to help advertisers build campaigns and improve conversion, which is one of the reasons why the revenue growth has been better and the guidance was good, is because they're seeing increased conversion. And it's fun to look back at this road that Meta has had. When IDFA came out and Apple made some changes and made it more difficult for Meta to give advertisers insight into what's going on, that was a negative impact on Meta's advertising business. They've built tools now around that are allowing advertisers to build attribution and also more quickly try campaigns. That's improving conversion. We're seeing that impact. And that impact is only going to increase as more of these AI products, both for advertisers and for engagement, start to become more prevalent. So that stands. All that aggressiveness really jumped out. I was talking to Doug at Deepwater after the Meta call, and he mentioned what surprised him the most here was just this stark contrast to how aggressive Google is, and they just have been a little bit timid in terms of how aggressive they've been going after AI versus what Meta and Microsoft have, how they've been going after it. And you see it, and I think that this Meta call should be a wake-up call to Google to get moving, or you're going to get passed when it comes to the advertising world. So that's the overall impact. They also talked about this AI assistant. This is this idea of like personalized AI. You ask AI to go and do a task for you, resolve your garbage bill, book tickets. They didn't give any sort of definitive timing, but that's kind of on their roadmap. I don't know if they're going to be able to get away with it, just given their stance on privacy, but they've got 2 billion plus daily active users, so undoubtedly people will try their personal assistant. I'll put this in the negative side of the category. It was they continue to be committed to Reality Labs, increasing their investment in Reality Labs. It is notably increase in investment. I think this is just going to be a tough road for Meta when it comes to really competing, because what they're showing with their Meta headset and their versus what Apple is showing with Vision Pro, it is night and day from a price perspective. Meta $500, Vision Pro $3,500, and also from a functionality. I would put, even though it's 7 times the price, I think Apple's 30 times better. And so when you think about what's going on with Reality Labs, it really has been pigeonholed into this gaming segment. And gaming specifically, we looked at the number of apps on Meta Quest site. 71% of the apps are gaming related. And of the 600 apps that are coming out at the beginning for Vision Pro, of those, there's 40% of those are going to be gaming related. So Apple's doing a good job of not wanting to get pigeonholed as a gaming device. And so that's the one negative. I wish they would pull back some of their spending there, let Apple kind of run with this and further build it out. Zuckerberg's committed to it, committed to the name Meta, and we'll see how that ultimately plays out. But big picture, Meta has done a great job of improving engagement off of difficult numbers. Advertisers continue to embrace their platform, and they haven't seen the full impact of AI, which should start to have a positive impact this year. On behalf of Pressure Points, I'm Gene. Bye for now.